Investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Wednesday the 9th. We are still in a holding pattern waiting for that CPI news on Thursday. Meanwhile, news yesterday about the talks between Caputo and Biden breaking down with the stimulus, maybe spooking markets a little bit, but we've had a lot of random moves and overall things have been a little bit bearish this week. So if we come back to the volume profile here, well, we'll get to that in a second. I think that's the one that really matters. But here you can see in the E-mini, like there was some like aggressive sells at points, but then it recovered. And I wasn't necessarily seeing headlines hit at that time, but that doesn't mean that they weren't there. That might have been, you know, news of the talks breaking down. But the thing that I think is interesting here is the treasuries here. Okay, so they finally have come back to the spot that we thought they were going to. So isn't that interesting? You know, this is just an example of how inefficient markets can be, right? We came down here after the non-farms payroll and we said, hey, you know what? That could be enough to close this gap. And sure enough, 3 days later, here we are. So pretty good bid overnight. There is a 10-year Treasury auction today, so that's pretty important, I think. At least it's the most important thing to the markets right now before that CPI tomorrow. Looking at some other markets, oil also was just on a tear yesterday. So we had been looking for $70 barrel oil for some time. And this does not look like it's going to slow down, and we could be back to $100 a barrel very soon. Gold and silver still just kind of holding. You know, gold having a really hard time staying above that 1900. And then copper continues to just go sideways as China continues to say stuff. Every day I see stuff about China saying we're going to clamp down on commodity speculation stuff. So, whatever. And then the dollar back below 90, just barely. But I mean, come on, we've been here for quite some time. So the dollar still in its range. And I just want to point out here in the E-mini, like this action in the overnight, and then here, you know, since London and all that, it's pretty nasty. So we're going to be like we were yesterday. I'm going to make sure, well, I haven't been doing a good job at keeping track of this, but I'm going to make sure I'm on my experimental accounts here because I do not see a good reason for me to be putting on a ton of risk here. Winston, I keep reading the internet went down yesterday for almost an hour. This outage didn't affect me. Did it affect you? Speculators thought or traders felt. Well, what happened was they fixed it before you woke up. Well, but by the time that we had our stream running yesterday, it had been fixed. But I talked about it in the beginning yesterday. Yeah, there was the whole Fastly distribution network was down. So a lot of what Reddit was down. Financial Times was down. Are the robots awake? I should probably turn on the robot. He made money yesterday. Actually, he's been making money. I don't know. I've changed it a couple of times. So this week is like the first where I'm like, okay, this is like a good test run. But yeah. Oh, you know, I forgot to mention here on Bitcoin. Bitcoin once again bouncing off of the 30,000 area. So yeah. Well, I have more to say about that, but you have to go check the Patreon. Yeah. In the end, it didn't end up being a big deal, but there was a really big decline. Oh, so I forgot, when we're looking at that chart and there was that first really big decline in the early morning, that was because of the internet outage. Coming back over here to the volume profile. I remember this one right here in the wee early morning. That was because of the internet outage. Now, this one that happened after we stopped streaming at 9:30, I don't know what the deal was with that, but that might have been news that talks between Caputo and Biden over the stimulus still broke down. Yeah. Okay, so the treasuries have been showing some activity here since the open. I am expecting there to be a pretty good amount of activity in the treasury, but they have not, as of yet, revealed which way they're going to go. Shall we make a wild guess? Because I think, and I don't want to do that yet. I think that we could buy. Sergio, good morning. Yes, Discord and Patreon, and Speculator Seth is where we want to. I forget what we want on the. I got so many links down in there, like what we should push the most. I suppose it doesn't really matter. What I should really be doing is I should be making like a newsletter or something. I don't know. Uppo? Uzi thinks up. Yeah, I'm leaning towards up. I think that it's a little iffy though. So I think that they still need treasuries. So one of the things that I've been seeing is, the yields have been decreasing, and that's been getting picked up in the headlines. So a lot of people have been saying, yeah, those bond traders, they're not buying it, guys. And I don't think that that's it. I don't think that that's it at all. I think that they're buying treasuries because they have to. That they have so much reserves and they're doing so much business right now, especially ahead of here CPI, and then later in the month you're going to have the Russell rebalance. By the way, I'm starting to see a lot of people come into my Russell rebalance video, which is good. I watched it and the information was still good information, so and the links still worked. But so they need the assets to back their transactions, and there's just like not enough of it out there. So the Federal Reserve has in effect created a demand for treasuries here at these levels. Isn't it ironic? Because remember when we were going down and we're like, who would buy treasuries? Well, the banks, because they have to, right? So that's a big factor today. But there's also this auction. We do tend to go down into the auction, and there's going to be this whole thing about what is the appropriate interest rate. And I don't know if it's lower from here. So we shall see. So far, it looks like they're going my way. Look at that. Pretty big. There's a 5K iceberg absorbing at 21. And as it went bid, they stacked 4K on it. Discovery, the guy that does Discovery Trading Group's Twitter, seems to be unhappy about the meme stocks. Every time that one of them takes off, he tweets about it. Citi's last remaining open cry trading floor has won a retrieve from Sky News. Look at that. Boom, boom, boom. I didn't see anything in the order flow. I had nothing. It was just the trend was already up, and we made a fundamental call that I think was a bit of a guess. Yeah, but good call. I'm gonna put that one down as we got lucky though. Yeah. What do you think, Uzi? He just smiles. Well, we'll put the skill in this one down to where we get out at, huh? But 3K, 4K up, that's pretty strong bullish action here. I'm a little weary though that we're gonna get what we got yesterday, where it's like it's moving up and it moves up like crazy, and then it sputters out and falls back down really quick too. It's like they're all clamoring to get them early. I bought 1,000 CB contracts. Thanks. Man, I woke up this morning and my ears were like all plugged. I was in the middle of a dream. I was a dragon and I was like, those are the best dreams. But my ears are all plugged and it made me a little bit dizzy. I'm like, not this again. And now I'm trying to pop my ears and they are. It's like every time I yawn. The London Metal Exchange operated a verbal trading ring. What the hell? Okay. This is the trading pit in London? Wait. What? This is they're all sitting nicely in this little room. It's got maybe that's not glass. Maybe those are just microphones. Low energy trading pit, right? Okay, let's read the story. Let's read the story though. Ring sessions, which last for 5 minutes at a time, in which see traders seated on a padded or red leather couches, interacting by voice and with hand signals as they buy or sell commodities like copper and aluminum, were suspended on March 23rd of last year. The suspension due to COVID social distancing protocols was the first since the Second World War. Ring sessions have been taking place in their current form for 144 years. The exchange subsequently consulted on making the closure permanent, arguing that forced migration to digital trading had been a success. But today, publishing the results of that consultation, the London Metal Exchange, which was bought for $1.4 billion by the owner of the Hong Kong Stock Exchange, said it had a change of heart. The exchange said it received a record 192 responses reflecting the importance and complexity of the issues addressed, with a wide range of views expressed. It added, the electronic discovery of official prices has worked well during the pandemic period. However, smaller physical market participants who are particularly focused on the lunchtime official prices have expressed a preference for prices to be discovered in the ring. The divergent views in response to the discussion paper were particularly apparent between traditional participants and some smaller physical clients on the one hand, and our larger merchant trader and financial participants on the other. That makes total sense to me. It seems to me that the pit is more fair to the small participants. Have we talked about Joe Biden's? No, I have not seen that. Well, we're going to have to look at that later because the Treasuries is just popping off here. Look at that. Look at that, man. That is That is what a strong trend looks like in treasuries, huh? If I'm so I'm going to put that up there just because that'll be 8 ticks. It's unusual for us to go further than that in one run, and my spot in the queue might be important up there. Well, gee, Uzi, if you had really bought 1,000 ZB contracts to pump that up, you're getting your money's worth here. That would be a good $1 million now. Right? 1,000 times 128. Oh, not $1 million, $128,000. Sheet, I wish, yeah. Look at that. 7K at 24. This one could be 8 to 10. This is a good $23,000 push. Okay. Well, I'm going to take it off there because they didn't bid strongly. There is some reloading. I might regret that. There's some reloading there now. Looks like they might push to the 25. Remember, I had my 8 at 25 halves, so. Volume's big chiefing up here, yeah. Now, the ZB is a little bit reserved on it, though, yeah? It's actually pretty evenly distributed. The Japanese yen is going up, but that doesn't appear to be the driver. Okay, well, since we ticked up again, I'm gonna give myself a 3 on that trade. I mean, as far as the Treasury trade for me goes, that's pretty good average trade, but it does look like I might have been able to get another tick or two. Oh no, wait, I took it off at 24 halves, so they need to just bust through 25 for that to have been worth it. She gets a little nervous at the highs, but the bids keep bulging. Yeah. So you see that. Somebody clearly needs them. That right there, 24 half, my read on that one was somebody decided, okay, maybe it is over, and they sold into it. And the guy that needs to buy is still there. Okay, 5,000. Yeah, pretty good trade. And if you haven't hit the like button, please do so. Thank you. I should just read those ones out. I should just I should make it so that certain people can be auto-read.
Hutza, and if you all haven't hit the like button, please do so. Thanks. This helps the channel numbers and also tells YouTube that this content is of interest.
Yes. Well, and by the way, like as this is happening, E-mini is just like flat. Dollar's not really going anywhere. I do see gold taking off a little bit. I do see gold moving up a little bit. So the correlations with gold still seem to be there and are strong. But yeah, okay. Could you imagine if I had gotten to filled it to 20 half? It was possible, but I was not early enough. So I'm glad that I did it the way that I did, where I put the bid out there and then I decided to take it as she goes if it went to. My DOM settings are a little different from yours, But man, I got over 1K buys at 7 prices. Yeah. Yeah, because mine is resets still on the 1.5 seconds. You probably have it set to like 10. I don't know. I kind of wonder, like, this whole thing about like how much absorbs at each price. I'm not sure that I necessarily care like how many contracts it traded through the whole thing. I'm kind of more interested in how many contracts are they willing to throw at it at a time. You get what I mean? But that was partly because I, had lots of footprint charts out. And I do kind of wish I had those because maybe I can't see the larger picture as well as I used to in some spots, but. It's going back to this Sky News article. Mr. Chamberlain's comment suggests there is a big division between market participants, with the big physical traders and financial players such as hedge funds on one side and the smaller physical metal traders on the other. The latter prefer physical trading in the ring because it enables them to hedge prices for specific dates in the future that they are able to set themselves. This is something unique to the LME. Other exchanges settle future contracts on standard dates fixed 1 month or 3 months in the future. The LME's approach, tailored to the requirements of the metal trade, was recently likened to the pages of the Financial Times to a scalpel rather than a Bowie knife. Oh, that's interesting. I didn't know that they could do that. Hey, Pierre, how are you? It's just something that I continue to see over and over again whenever I look into the issue of physical trading floors is that there is an advantage to the small market makers in a pit because they can know who they are buying and selling against. And also because you can talk to people and you learn a lot more that way, whereas us, we're just online. I feel like the online community doesn't do a very good job at, getting all of the traders up to speed. We just teach everybody technical analysis and they don't know anything about the actual market, which is a problem. Okay, 6K at 24.5. Wow, they've traded 32,000 contracts at 24.5 now. So at 24.5 looks to me like I was getting my correct exit because there was a little bit of a hitch there. But that doesn't mean that there can't be more. One of the questions here now is it that somebody just needs a certain amount of treasuries, or is there a specific interest rate that's being targeted? Sheriffs of Wendy's surged 26%. When I look at that, one of the things that I was thinking about last night, well, in addition to why do I suck so much at Overwatch, I went through and I finally finished ranking like the matches that you have to take to get your rank for healing, and I must not be healing enough because it ranked me really low. It was like 1200. I was like, what? I was shocked. And that makes me feel bad about myself. But it's no big deal. We can practice, we can get better. I'm not stupid or crazy or anything. I just not good at that game. That's all it is. But the other thing that I was thinking was like, oh man, yesterday the S&P 500 was so effing frustrating. And, well, you don't have the volatility over there is one thing. But you don't really have any reason for it to trade. So yeah, it's going to be a crapshoot. It's going to be random action over there. So really, you kind of need to go to where the action is, isn't it? Well, it seems like the action is in the meme stocks these days, but there's a lot of problems with doing that. One of them is the wash trading rule. It's like with the way that I trade, I would have to be really, really consistent and only win. And if I lose, you can't touch that for like a month. What is Overwatch? It's just a video game. It's a video game made by Activision Blizzard. Looks like maybe they did clear 25 now. Still having difficulty with it though. I do detect a little bit of steepening by only a tick, but the 2s and 10s always flattening. Every time I see that, I look at it and it's like the knob spread is steepening a little bit and the 2s and 10s flatten. And I'm like, what's going on? And then I think, oh, my spreads must be wrong. But I don't think that they are. The problem with gauging herd immunity at a population-wide level is that unvaccinated people aren't evenly distributed in the population they're clustered, which means something like B1 spot 617 could cause nasty mini surges in places that haven't really had the virus. Yeah. Anyways, so then I think about even if all of the rules were set up, I think that what the government should do is they should have something where it's like you take a test to become a market maker of sorts. And you would have to take this test to be able to trade derivatives and futures and so forth. But if you had taken this test, then you would also be able to provide liquidity for stocks. So you'd be able to place limit orders and you would be able to take intraday trades, and your intraday trades that are, buying and selling. If you take a loss on those intraday trades, you still get to write them off. You get to write off your profits and losses as a whole on your taxes. And you don't have to worry about them on an individual basis, all of this wash trading nonsense. But it would have to be separated. There have to be like limitations on what you could and could not do. Like maybe in the account, you would have to close your positions at the end of the day. Or like you basically, you wouldn't be allowed to use that account to hold a long-term position and then just wash it for the taxes, because I do understand why they want to prevent you from doing that. So it'd have to be like, there'd be certain kinds of restrictions on that account, right? I think if they did that you would have a lot better liquidity in stocks, and those markets would be a lot more efficient. Because when I look at it now, it's like, well, it's not, the stocks don't appear to be very efficient. It's just that we can't really take advantage of it too much because of the wash trading rules. But then I also look at the Reddit thing, and I see so many people just chasing the Reddit stocks, and that looks like not the place to be. That looks like you're going to be constantly getting yourself overextended into hype markets that are likely to fall on you, Oh, this whole thing with El Salvador, yeah. Win was posting a video, or sorry, some text from an article about El Salvador making Bitcoin legal tender in their country and stuff. And there was lots of people making, all these, oh, it's going to be important because now they have to treat it like a currency and all of these things. No. I mean, maybe that happens, but I doubt that it's going to have a very big effect on Bitcoin. There's all these people that are like, oh, now we should move to move to El Salvador, bud. Have fun. Have fun. Cicadas trample on First Amendment, grounding Biden's press plane. That's funny AF. I haven't heard any of you guys. Any of you guys on the East Coast been dealing with the cicadas? You know what I found out about this, actually? Because it always seemed like, hey, isn't there's always like a cicada 7-year cycle syncing up that everybody is freaking out about, right? Well, it turns out that it's by region. So when it was happening to me when I was in Missouri, that it was for that place, and now it's happening on the East Coast. But because it's happening on the East Coast, it's a bigger deal, right? Do I not have Nassim on my traders list? Hold up. When you are shown a picture of an unspoiled, lush, and picturesque lakeside forest, imagine that in person you would be exposed to the summer heat, high humidity, and mostly exasperating mosquito bites. This guy. Add remove from lists. Traders. Okay, cool. You should be in that list for sure. Good morning, Ace. Florida always has cicadas, yeah. Well, in the Midwest, there was always that sound, but they were kind of hard to find. It was like there would be one somewhere on the block. Good luck finding it, The immigration debate shows progressives have abandoned the working class from MSN.com. Wynn says, I'm not seeing any cicadas. It is gorgeous here. I haven't turned on my AC yet. Just the regular critters here. Chipmunk, squirrels, deer, and a little house wren, and my wreath with one egg. Blackstone's Byron Wine sees U.S. inflation coming but prefers gold to Bitcoin. Hey, you know what? We're below 24. We're below 24. I read it right. I've been working on calling the neighborhood bar to owls to our yard. Oh, really? How do you attract the owls? You know what I want? I want to become friends with a flock of crows or a murder of crows. Yes. It seems to me, like they have these laws about crows and stuff like that. It seems to me that the government is concerned that you might form an alliance with crows and cause problems. Yeah. Owl call audio on the... So it's literally like you just play the call and they'll come. Charlottesville lawmakers vote to remove Confederate statues at the center of the deadly Unite the Right rally. You know what? I'm pretty sure that he has more than one statue, and maybe he doesn't need that specific statue or anything, but I do feel that what was his name? Anyways, I do think that he should have a statue, but that's just me. And it should be like at the military academy or something like that, it shouldn't be Can't even remember the guy's name. Lee. That's his name, Lee. Robert E. Lee. I think that Robert E. Lee should have a statue. That's just me. I don't think that people should be like worshiping the statue or anything, but I do think that there should be a statue for him. But maybe not that statue, because that one's got bad feelings now, huh? Well, Ace, you're saying Robert E. Lee does have a statue, but the headline that we're just reading is that Charlottesville is removing that specific statue. So I bet you there's probably other ones. Oh, does he have a statue near his grave in Virginia? And there you go. So maybe it's fine. They're gonna replace the statue of George Floyd. Please no, man. Have you been reading this stuff about all of the problems they've been having with like shootings in the area where they have the shrine to George Floyd? It says, "Oh, okay, yeah, it's at the Washington and Lee University in Virginia." Okay, there you see that seems appropriate to me. That seems appropriate to me. Like I get a little agitated because remember last summer when all of a sudden it was like we need to tear down monuments to George Washington and stuff too, like that was really disturbing to me when they were defacing statues of George Washington, because when I see that to me says, oh, you know what, this has nothing to do with, oh, we need to get rid of these statues because they're racist or something like that. What they're doing is they're playing games because in reality they're communist and they want to destroy culture. That's what I thought when I saw the statue of George Washington being defaced. You know, and of course there was a lot of things that went on in the Civil War that were bad, and I think it's incorrect. Some people try to be apologists for the South and the Civil War, try to say that it wasn't about slavery. It was totally about slavery. It was about the states thinking that they had the right to have slavery or not. It really came down to that. I mean, when you have a war, there's almost always like an underlying reason that is maybe like the real driver of it. And there's definitely that sort of a thing going on where the North is kind of the core and the South is kind of the periphery, and they had conflicting economic interests that kind of weren't working out. But that was not the thing that was in everybody's minds, right? That was not the thing that the people that were separating out they weren't thinking like, oh, well, we need to fight this war because of these economic concerns, yada, 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 yada. It never works like that, because people can't square that stuff away in their heads. So they come up with, there has to be some other more emotional thing to use as an excuse, right? So it was 100%. And that thing that comes at the forefront of the mind, even though it might not really be the kind of the incentive driving the war, it really becomes why the war exists, because to have a war, you have to have that emotional, thing. Anyways, so don't get me wrong about that, but at the same time, I think that there's this tendency to want to come in and say, well, these people in the South, they were all just evil, and, they were all just evil people, and we just need to forget everything about that and all this. And I don't think that is fair to the people at the time. Like, you might have been wrong about that one thing. That doesn't mean that everything else in their lives was awful. You know what I mean? Civil War was about money, slavery was just the South's primary source of income. Well, that kind of, yeah, was kind of the same, saying a similar sort of thing. Associated Press meets with Israeli ambassador over attack on Gaza building. Yeah, they're going to tell the Associated Press, like, yeah, they really did have all those people in there. How were you so dumb? Poor people fighting for their rich. Anyways, so going back on that whole thing, that's why I kind of say, like, when you come in and you have like General Lee, for instance, and you take the position that everything about General Lee was evil and we need to get rid of that, I don't think that that's the right call. Like, General Lee was a brilliant general, and he made peace with it after the war and went and taught at the military academy after that. Like, I don't think that we should throw everything about his life away because he was wrong on that one thing. Otherwise, what we're going to end up doing is we're going to not learn the lessons that they learned. You know what I mean? There's some who say Lee was a patriot, but just fought for the Southern family. Well, it wasn't. My understanding about it, Ace, was that basically his allegiance to the military of his state was stronger than his allegiance to the military of the country. But I don't think that people looked at the federal government back then the same way that we do now. You know what I mean? Tear down all statues of humans, replace with statues of dogs and cats? No, I think that we should understand. I think that we should seek to understand what these people thought and why, and so that we can understand where they went wrong. Lee being a perfect example. Like, I think that one of the big takeaways from the Civil War is that national unity is important. You know what I mean? Lincoln was right in the end that the United States could not be the power that it is today if the South had won and the United States were split as a country, right? There was that national unity, and because some people had felt like their state was more important than the Union, that was a mistake. And this is still a pertinent lesson today that, I don't like what's going on in California. I don't like what's going on in Washington. I'm actually really interested in this story about that there's a bunch of counties in Washington that want to break off and become part of Idaho. You read about that? They want to make this super state with Idaho. And I'm like, I totally understand where they're coming from that. But I get really concerned when people start talking like they would rather their state be its own country and we not have union. Like, that's still important. And if there's a problem there, what we need to do is we need to sort out how we can still be a union and keep everybody happy. That's I think one of the really big lessons that the nation should be taking from that. Because that's why Lincoln did all of that stuff, was because he said, no, we have to remain one country. And I'm willing to force that through war, is basically what he said. And he was right. Think about all of the things, everything about World War II and all that stuff. Granted, Allies probably still would have won World War II without the Americans, but it would have been a lot rougher. Probably wouldn't have been like a complete, victory. Europe would probably be very different. I veered like way off into the bush on that one. I think the reason I did that was because there's been a lot of discussion over that sort of stuff last year, and we never really talked about it because I was a little wary, and now I feel like, well, we can kind of have those discussions. Like, you got to remember the history. What's another, talking about history? On Netflix, there is a documentary about Japan. And how basically the warlords that fought in Japan, and how it came to be that the nation was basically conquered by one set of warlords and turned into like a unified country again. It's so interesting. And like, there's a lot of really good history there that I've never heard of before. It feels like your skin is on fire. I haven't done the polar bear thing in winter, but I would have given the opportunity. It's so hot out there right now. It was pretty nice yesterday because it was pretty overcast and windy. So in the evening it was cool, but it's been hot. Like, going out into my garage to work out is just, I don't look forward to it. I need a better fan. Maybe a swamp cooler or something. Should get one of those big garage swamp coolers and put it right in front of my chair. Thinking back on my Treasury trade, and how good of a trade was it to get out at 24.5, because there was a lot of volume at 25, but that would have been a little bit of anxiety inducing. Like, it took a while for it to get up there, and there was only like one opportunity, because it would have gone up, and then you might have said 25.5, 26, and there's a bunch of volume up there. I don't know, like, oftentimes when you're getting good trends going up, you'll continue to see these big offers pop up as everybody expects it to go up to those locations. But you'll also get it goes up and those orders just get left behind and they just stay there and it reverses. So at this point, I don't think I really know what will happen. We could have another move after the S&P 500 opens. We could have another move up. That is kind of what happened yesterday, right? But I don't have enough now, I think, to trade it. Like, when it started, the market had been so tight, and we kind of knew that the fundamental direction was up, that it was worth kind of taking a little bit of a gamble on that one. But at this moment, I don't think that it is. Wow, South African woman gives birth to 10 babies in Pretoria. Holy crap. Oh, do we get... Hold on a second. Oh, we do. Okay. At 8 o'clock, we get the Bank of Canada interest rate decision, Wells Fargo analyst, we do not expect any rate hikes from the Bank of Canada today. We expect policy rate hikes to materialize in the second half of 2022, which would make the Bank of Canada one of the first major G10 central banks to raise interest rates. Tighter monetary policy has helped the Canadian dollar be one of the top performing developed market currencies this year. In our view, an economy that should remain supported over the course of the year, combined with tighter monetary policy, can continue to result in a stronger Canadian dollar relative to the greenback. Now, that's interesting. How is the Bank of Canada able to be more hawkish when they have been hit harder by the virus and are still locked down? And it's not hitting their economy? Now look at that bid up to 25. And 3,000 trade into 25F. So it will take a lot of volume to go through it, but that could totally happen. And now that we're up there, do you see the targets? It's like all of a sudden they all show up. Every other price. And let's reset here. Patrick Roney says life is meant to be hard. Keep grinding when life looks like easy straight. There is danger at your door. 2 in 10 voters say they've personally witnessed a UFO. Another 2 in 10 say they know someone who sincerely believes they did. That's all UNICEF needs is 10 more mouths to feed. I have to say, I very much dislike the propaganda media that you see all around that like people need to stop having kids because the world is in danger, yada yada yada. I don't think that that's good for society to tell people that you shouldn't have kids. I think that a lot of the problems that you have in the United States right now, like culturally, stem from the fact that you've had a generation of kids growing up that they're not thinking, oh, I definitely want to have kids. You know, it's like for some of them, it's like if it happens, then maybe it happens. But I don't think that there are very many people these days that growing up with the thought of, oh, someday I'm going to have my own kids. They don't think that. And I think that causes a lot of problems. Hold up. I will check here. Uzi says he just got a email from the CME that we will be interested in. Let's see here. Where's Gmail going to put it? Updates? Yes. Launching in August 16th, 2021, cash-settled micro Treasury yield futures will offer a streamlined way to trade interest rate markets with contracts based directly on yields of the most recently auctioned Treasury securities at 4 key tenor points on the curve. It will directly reference the most widely followed U.S. Treasury market metric, yields of recently auctioned Treasury securities. Trade across the yield curve with contracts the 2-year, the 5-year, the 10-year, and the 30-year. All 4 contracts are sized at $10 per basis point of yield, creating a seamless curve spreading opportunities anchored by broker tech, U.S. Treasury benchmarks sourced from transactions on the leading cash U.S. Treasury trading platform. Explore micro Treasury yield futures. Contract size will be $10 per DV01. Oh, that would be cool. We could do that. Now, I think the difference will be between these and the treasuries, aside from it just being the yield, is it sounds like that it's going to be the yield of the on the run. not cheapest to deliver. That'll be important because we'll be able to do basis trades off of it, right? Like you could buy 3 of those and then buy 1 Treasury and try and make money off of the change in the basis. So you could then do spread trading with a little bit less risk. I wonder if they would give you the margin, or if you would have to put up the whole margin for them. Okay, what day is that? August 16th. I'm going to put that in my phone. Make a video about it. August 16th seems so far away. Yes, I see. And then they have the on the run maturity price yield. Yep. How are micro treasury yields different than existing treasury futures? While complementary to CME Group's existing suite of treasury futures, micro treasury yield futures feature an entirely new contract design intended to serve new use cases and provide market participants with an expanded set of trading and risk management capabilities for the U.S. government bond market. Micro Treasury yield futures are cash settled, traded in yield, and track a single on-the-run security, whereas existing Treasury futures are physically delivered, traded in price, and track a basket of deliverable securities. But yeah, that is... Okay, so... Okay, so the first thing that I'm thinking about here is that there is a difference. Like you can have a situation where like the 10-year moves up 8 points and the yield declines by 1 basis point. And you could have a situation where the 10-year goes up 8 points and it doesn't change by a basis point, or it changes by 2. Like that DVO1 changes. So I don't know when that would happen or why that sort of thing happens, but it does happen. So that would be why it would matter to be able to trade it in yield. Or maybe it's just because people want to know what the yield is. I don't know. Ace is getting out of that and because you think it's headed down? It's curious to me that you say that, because on Monday I was a little bit like, okay, why did he take a short? Like, it just looks sideways to me. Anyways, okay, tracking a single on-the-run security, I already mentioned that, so we can do basis trading. And then it is cash settled. So if it is cash settled, that probably means that we will be able to continue trading the most recent contract further into the month, right? Like we wouldn't have to stop trading it the 3 days before. Son of a bitch, now heads up. I was like 4 ticks, come on. Why trade micro treasury yield futures? Micro treasury yield futures straightforward yield-based design is both highly approachable and well suited to a variety of trading and risk management applications, including gaining exposure to on-the-run treasury yields, hedging treasury auctions with greater precision, seamlessly execute DV01 neutral yield curve spreads, and trade the futures versus the cash basis via EFP, which is exchange for physical. Okay, yes, I see. So there's this kind of this funky thing that you can do, where you like. It's not something that I understand, but I remember them talking about it when they did that latest webinar, where it's like you can do an exchange at any time that you want, but it's not something that we would ever do. Trade the futures versus the cash basis via EFP. And seamlessly execute DV01 neutral yield curve spreads. I see. So with that one, so what they're saying on that is if you want to do a spread trade in the Treasury, like I was saying, the DV01 can change. The 10-year can move up, and the DV01 can change from like 8 ticks to 7 ticks or something like that. And so there's kind of this disconnect. So there can be a situation where you get the yield curve correct, what direction it's going, but because of the DV01 changing with the prices, they don't quite line up. So if you want to hedge yourself against the DV01, it's kind of difficult. But if you can just trade it off of the interest rate, then you don't have to worry about the DV01 point. In fact, it sounds like all 3 of these contracts are going to be the same in that it's going to be $1 or one tick size will be $1, 1/10 of a base of 1 basis point. 1/10 of a basis point tick up will be $10. It will be the same across all 4 of these instruments. So you won't have to if you want to do a spread trade, I can just trade 2 contracts against each other and do the spread, and then I would get the span margin for that, and it would consider it even less, so I would be able to trade multiple contracts, right? Oh my gosh. Okay. So that first of all, I have some research to do about basis trading. I'm going to have to bump that up to the top of my list. But I also think that we're going to need to do more research about spread trading, trading the yield curve. Because this will make yield curve trading much more available to us, won't it? Before, it was kind of like, well, you want to, you're going to leg in. I want to do, like, what is the like, if I want to do the knob. Yeah, if I want to do the knob, it's going to be like I have to buy 5 10-year contracts and 2 30-year contracts. And, like, that's a lot in commissions and stuff. But if I can just buy 1 10-year and sell 1 30-year, that's awesome. And it wouldn't even have to be like a crazy thing. Like, it could just be like an arbitrage, frankly. And then, like I said, you could still trade the basis. You could still trade the basis or trade the DVO1. The change in the DVO1. So like you hedge yourself with the DVO1, like you buy a 10-year and you sell one of the micro futures. Oh my. I want to put this in the title, but okay, I should be writing all this shit down. Okay. Okay, so there's the open is there's some bullish movement going into the open. It was only like a few contracts, but of course they sell it immediately afterwards. I wonder, they already have, when they say that they're micro yields, there's already some interest rate futures out there, right? Like, swaps. Maybe they don't. Maybe they don't have straight yield ones like that. So then why would they call them micros? See, there's the SOFRs now. I'm wondering. 3 month, 1 months. $25 per basis point. Watching the pre-market this morning on all my positions, it looks like a boring day to me. Yeah, trade-wise, this is looking like the past 2 days, right? It's like, well, now, actually, I take that back because the dollar is cratering. Holy crapola. That's a pretty big move over the past, well, I haven't been paying attention, 30 minutes? The euro is just taking off. There is no fear of tomorrow's CPI report in the bond market, tweets Forex Live. Falling yields finally hit the dollar. Yeah. Oh, and the Treasury did go higher, didn't it? Yeah. Well, that was kind of what I said, though, huh? I was like, there's definitely a hitch here at 25.5, but that doesn't mean that there couldn't be a continuation of the move later. I have no way to know. Where's my NQ, Dom? There we go. I'm too excited. Did I miss anything that I had said there? Okay, you can trade the curve without the DV01 changes and without having to worry about ratios. You could potentially trade the change in DV01. You could trade the change in the basis between the on the run and the cheapest to deliver securities. And then you get greater precision. So the greater precision thing is that, like, your treasuries, say I think that the yield is going to increase 1 basis point, where that price ends up being is not exact. So if you think that you have an exact yield price that you can get there, you can't necessarily convert that directly to a specific, there's still going to be like a in between. Oh, yep. Cash settled, so don't have to worry about a delivery in contract expiration month. Either way, you get dollars while a bond matures. So if the dollar falls, the bonds become more valuable. That makes no sense to me unless I'm accounting for the coupon rate. So I think the reason why they're saying that flow matters is because if the yield in the 10-year treasury falls, that is less attractive to foreign buyers. So some of the demand for the treasuries have been coming from particularly guys from Japan wanting to come in and buy the U.S. treasuries. And with the yields declining, it's becoming less attractive to those Japanese traders. So that affects the value of the dollar. There's less flow coming in from Japan, and hence you get, the Japanese yen is moving up here. Although it does appear to me, and you get to zoom out here a little bit. I don't know. That it appears to me that the euro is being a larger contributor to this current decline in the dollar. But that does appear to be the reason why the dollar is going down. I'm still thinking about the micro features. I bet you those instruments are going to be crazy thick. Like I'm one of the things that's unclear in my mind is how much interest from institutional investors will there be on that? It seems to me that if I was Goldman Sachs, that I probably wouldn't have any desire to trade the micro futures. That there would maybe be better ways for them to get direct exposure to that, but I don't know where. Well, treasuries are bidding up now as the E-mini appears to be falling. It's not a significant decline in terms of cumulative delta, but it's a pretty clear correlation here in the treasuries. The move, the degree of the move in the treasury is now getting dramatic. So we can look back to, what was it, May 6th? Yeah, May 6th was the last, May 6th was the last non-farm payroll. And that was the day that we had that huge spike up, but then it came almost all the way back, and then we moved down lower later. But the next day there was 132 and 30 half. So there's one target there, and then above that it's like, it's crazy town. But this is a significant move beyond all, just come back over to here. That's a pretty significant move. Probably the next spot beyond that would be the 100-day moving average, right? Very curious. Stops getting hit in the T-notes. I love bonds. Dude. So here's the thing. is I was getting into the pricing of bonds and so forth. Like all of these models and everything. I was like, yeah, I need like a Bloomberg terminal and $1 million to do this kind of trading. So I was learning all this information that I thought was really, really interesting, but I wasn't sure if it was ever going to be relevant. And now, with these new futures and the way that they're designing them, it appears to me that it will be relevant, and that there might be some things that we can take advantage of. So I'm so excited about it. And it'll be a new product, so there's always opportunity in a new product. This is the kind of situation that I'm always talking about, where it's like, yeah, okay, so you can come in and you can trade treasury futures. It's really, really freaking hard, and now might not be the most optimal market for doing it. And even in the E-mini futures, I kind of look like right now, this isn't the most optimal time to be trading the E-mini. In my opinion. That was a big block sell that they just absorbed there. You see that at 28? They hit them with how big of an order was that? Jeez. That was a 4,600, so almost a 5K lot, and it didn't phase the bid at all. The iceberg just ate it all up. That is nuts. So, yeah. Adrian says he's excited too. Yeah, anyways, so, I always just say, well, that's where you can just trade it on sim or take a really minimal risk. And maybe at some point in the future, the markets will be different or other market opportunities will come along. And because you've been practicing and learning and everything, you're going to have an advantage. And I think that that's our time. Yeah. So I should be. So I was kind of questioning, if something crazy happens over the summer, what should I start using some of that risk? Well, now it's a for sure no. I'm going to save it all. I'm going to save all of it until July 16th. I need to talk to EdgeClear. I never emailed them. Do we know what the commission will be? No. Given that one tick is $10, I'm going to bet you that the commission is probably going to be somewhere around $1 to $2, you know? Like a Treasury, the 10-year Treasury commission is like what, $250, depending on where you go. So this one's going to probably be more like between $1 and $2 is my guess. It won't be like the E-mini where you like literally can't make money just trading the spread. But in these things, yeah, the tick size is $1. Well, no. Oh, no, you're right. The tick size is $1. So it's going to have to be less than $1. Or maybe equal to $1. I'm sorry, I was wrong. The contract size is $10, but that's not how much you make per tick, huh? $1. So it's going to have to be less. It's going to have to be $1 or less. I'm hoping it's really going to be up to the CME, right? Because, well, you know, or right now in the E-minis, it's the CME is the one that's taken that makes it what it is. It's like 50 cents over there, and then yeah, the brokers aren't making all that much from people trading the micros. I think that's part of why they're like increasing the how much you have to pay for data and things like that, because they're not necessarily making a ton of money off of the commissions anymore. Because, you know, everybody used to trade full ES contracts and now they just trade micros, and so they're making like $1 a trade. I doubt that these ones will be so popular. Yeah, how many people out there are going to be really? I have never come across another futures channel that was really focused on trading treasuries. Never seen it. It's always the E-mini, and even I've kind of moved over to the E-mini. But if they bring that back, I am on board, man. I've got a lot to brush up on, and there's a bunch of books that I was kind of have that I hadn't read that I can get into. So, and we have plenty of time to prepare. So it's go time. Oh, that's funny how that just like totally changes my whole mindset. Because I was thinking about my vacation next weekend. I was like, well, okay, there's this book that I've kind of been reading in this, but now it's like, no, we're going to be reading the Treasury basis. We're going to be taking notes. We're going to be building models. It's going to be crazy time. We'll be making some spreadsheets. Maybe we program it in R. Maybe it's worth trying to go and get the quick strike data now. Okay, so there was a crazy move. Was it a move down? Yes, it was. No. It was. I think it was an up move. Something happened there. Oh, you know what? I don't have my financial juice turned on, so I might have just missed the headline. Interactive brokers to offer crypto trading by summer. Okay. Good luck with that. Oh, actually, that is actually really weird. Not weird, but like, that's a weird one to think about now. Okay, so while we're getting all this crazy going on in the E-mini, we should remember that in 10 minutes here, the Bank of Canada decision is going to come out. And that wouldn't necessarily be like a huge deal, but we don't got anything else going on right now, right? So, and they are, does sound like that the Bank of Canada is hawkish, like they're not going to change the interest rate or anything, but you know, they might have comments that seem hawkish, which could further weaken the dollar and would just feed into the trade that we're already having with the yields going up and the E-mini kind of being like weird. Biden is close to issuing a new executive order targeting personal data collection through apps such as Chinese-owned WeChat and TikTok, says sources familiar with the matter. Meaning somebody from his cabinet. Oh man, here's this guy on Twitter that said that he was going short them. The 10 years. He probably got hosed. It's a lot that's traded up here. 28 half. I'm not, like I should be saying more, but I'm just my mind just going interest rates, spread trading. E-mini back towards its lows. Yeah, actually no, new low for the regular session. So I wonder, Reddit. What is it? /bonds? That's right. Okay, cool. The Federal Reserve can use the planet Mars to set interest rates and control inflation according to a new book. What the heck? Treasury's coming back pretty hard here. E-mini moving up. Okay, so I'm not wrong looking at it again. If interest rates tick up, TLT goes down in price. Yeah, because it's attached to price like these are. I wonder, so TLT, it's the 20 years. Oh, it tracks the 20-year bond index? Okay. But it should be going up today, right? Eurobond hits a high volume CHVN soon. The market will go sideways a few days before we have the next move, says Tommy Lawrenson. Yeah, I don't see the E-mini doing much of anything interesting until CPI tomorrow, right? Well, Etherator, I think that the key thing is that it is tracking an index. TLT is an index fund. But instead of the index fund being like the Treasury futures, it's just 20-year bonds. So there's an index somewhere on ICE for 20-year following. Yeah. Where is, come on. Fund summary. The investment seeks to track the investment results of the ICE U.S. Treasury 20-plus year bond index. The fund generally invests at least 90% of its assets in the bonds of the underlying index and at least 95% of its assets in U.S. government bonds. The underlying index measures the performance of public obligations of the U.S. Treasury that have remaining maturity greater than or equal to 20 years. Yes, but a lot of funds get exposure through the Treasury site. Not through the Treasury site, but through TLT, as it's easier to move in and out of shares. I don't know about that one. So my question is, if you want to get exposure, why not just buy the bonds? So would the trend? I think that in this particular instance, the question would be more about the trading costs of it. And what is the liquidity in TLT compared to the liquidity in the actual Treasury market? And especially since you could go and you could trade the futures, and there's all of these different instruments that you could go into and buy them with and hedge against. I would much rather be in the actual bonds themselves. Okay, so here's the Canadian. My understanding is that shares are easier to move. It's not necessarily true. So you got to remember, you just buy one bond, that's $100,000, right? And it's like the largest market in the world. Vanguard might hold bonds and then balance their books with shares. Yes. Or they might balance their books with futures. I don't know how much of it comes through TLT. The reason I'm skeptical about it is because that's just never been a factor that I've ever heard anybody talk about. It's always been like, when we're here trading the futures, it's always the futures and the cash. And I never hear, oh, and the ETFs have this big impact, right? I always thought that the reason that the ETF existed was so that average investors could trade off of bonds. TLT is what I've heard come up from most people. Well, yeah, because most of the people that you and I are talking to are retail traders, right? See, if you're on Robinhood or Thinkorswim and you want to trade something to do with the bonds, you don't have $100,000 to go out and just buy a bond. So you would go and you would trade TLT. So TLT is kind of more of a swing trading instrument for equity traders, right? But I guess I don't really know. I should be really careful to clarify here. I don't really know what percent, how much institutions look at that or not. I'm just skeptical and stating, that for them the alternative is to just go and buy the bonds themselves or to trade the futures. They can go and do that. And why would they trade the TLT versus the bonds themselves, or why would they trade the bonds versus the TLT? Is kind of the question that we would have to answer. Yeah, anything I would say in regards to big funds is just what I could find from my own Google fooling. Yeah. Let's see here. Anywhere from 2 to 10 million shares. Yeah, I don't think so. From an efficiency standpoint, it makes sense for me to have a bonds base and then dynamically adjust with shares. Well, so what I was getting at with that is like, if I'm going to come in and I'm going to buy 100,000 shares worth, okay, of TLT, that's going to come in and that should have some impact on that market. An impact that other people could be arbitraging away with the other instruments, right? So when you're making a transaction like that, if you're a big fund and you're going to be making a transaction like that, the first thing on your mind is reducing the transaction costs, and how much you move the instrument as you get into it is a huge part of those transaction costs. So that's where I'm saying that probably you're going to go and trade in the thing where you have the liquidity and your cost of doing the transaction is the least. So if I want to be in it for just one trade, like if I'm a hedge fund, for instance, and I just want to trade, I'm making a bet on tomorrow's CPI, I'm not going to buy TLT. I'm gonna go and do the bonds, because I can do the bonds for, I take a fraction of the number of shares with the leverage in futures, and it's the most liquid market in the world. You know what I mean? So like, let's look at TLT. Let's do that. Look at it in Fidelity. But when I'm looking at the volume, like the CME, the 10-year Treasury futures trades about the same amount of volume as TLT does. Okay, but the 10-year Treasury future is much more levered, right? So that alone tells me that there's more money in the futures compared to TLT. And it's probably even more dramatic for the cash market. Okay. Yeah, it is. Well, that's interesting. So when we look at the book in TLT, it is a 1 cent spread. So that's good. But actually the depth is about the same as it would be in the 10-year Treasury, isn't it? It's about 3,000 to 5,000. So I suppose you could be doing it. Referring to a 1.15 million initial position. Well, yeah, but like I would think of it more from the perspective of like, I want to risk $1 million. Okay. So let's say equal risk reward. If we're right, we'll lose $1 million. Or if we're right, we'll make $1 million. And if we're wrong, we lose $1 million. How many shares do I have to trade to do this? Okay. So we come into, let me close this. We come into TLT. Okay, so TLT is 141.68 right now, right? And now, how big of a move do we think that we will get? Well, let's look at today's move from the overnight. So from 140 to 142. Okay, so for $2. So $2. Okay, so if we wanted to make $1 million, then we would have to trade 500,000 shares, right? Made $2 on each share. Okay. 500,000 shares, which would be, over 10 million, right? Which is really 5 over 100, or 5% of the liquidity in the TLT, right? Okay. Now we look at the 10-year Treasury, and we've gone from 132 and 11 half up to 28. Yeah. Let's say 12 to 28. Okay, so 28 minus 12 is 16, right? No. Is that right? 6, 8, 28. Yeah. 16 ticks. Which is about actually, it's not 16 ticks. It's actually 32 ticks. Okay. So that's $500 per contract. Okay. So, and we want to add, we want it to be 1 million, right? 32 ticks. Oh yeah, because that's $500. Okay, so we made $500 per contract. Okay. Divided by 1 million. Right. Is 2,000, right?
Block by.
I already overran my buffers, and now my head is like, no, I don't want to count zeros. 2,000. I'm right. Okay. I should just trust myself. No, I really didn't trust myself. Okay. So you would have to trade 2,000 contracts. All right. Which is 2,000 divided by, and what were we getting here for volume? Let's just say, for the sake of argument, that it was a million shares. Okay. Which means it's 2 out of 1,000. So it's like, right? Or 0.4% of daily liquidity. Do you see what I mean? So if you were to make a trade of that nature, your transaction costs would be less with the futures. But like I said, I think I think that the main driver of TLT is for smaller fries to be able, that don't have access to futures or actual cash treasuries. And so another thing is if I wanted to hold it, right? So if I want to make that trade in a day, but I don't just want to have it for tomorrow, I want to have it for the next year. Treasuries don't necessarily make sense at that point, right? But these each contract is worth like I forget. Each contract is worth 10 of them, right? Oh no, it's worth one bond. It's worth one bond. So well, the 20-year doesn't have a mini as far as I know, so the futures are more. Well, so there is a 20-year future on ICE. So I never understood why TLT is the one that gets the attention, why there isn't a 10-year. Well, there probably is a 10-year, but I don't know. It's kind of weird, right? But that's the way that they decided to do it. But like, let's say we're Jeffrey Gunlock, right? Say we're Jeffrey Gunlock. He doesn't buy shares of TLT, right? Actually, let's go look. Let's go look.
Block buy.
Treasuries really came back hard there, didn't they? $13F. Okay. Maybe I need to search for double line holdings. Apparently I have to sign in to be able to see this stuff. From Whale Wisdom. Okay. Top holdings: United States Treasury bonds, U.S. Treasury bonds, J.P. Morgan, U.S. government, MMKTIM, Federal Home Mortgage Corporation. Yeah. So, see, if you're like Jeffrey Gunlock, you just buy the bonds. ZN is a 10-year, yes. That's correct. The CME doesn't have a 20-year future. ICE does, though. ICE has an index. Which is even more different and kind of weird, and I don't know why they would do it that way, but. No, we still got plenty. I was just thinking, I was like, oh, I'm not going over, am I? No, it's only 8:19. Anyways, was that enough? I think that they gave it. But of course, if you're on Robinhood or wherever it is, probably TLT is the best instrument that you have to try and make a trade off of that sort of thing. Yes. Now, to the point, if I think that CPI is going to be high tomorrow, I want to be selling them for sure. And when you see how the 10-year Treasury has come back there after, just going into and then after the Canadian interest rate information. Yeah. Oh, I see Adrian in Discord going, what a bamboozle. You're totally fine, Etherator. I understand. Like the thing that we've got to remember is that as much as we learn, and I really feel like I have learned a lot. And the thing that frustrates me the most in my day-to-day life is going on Reddit and reading what people on r/day trading are saying and being frustrated that there aren't more people that have learned the things about trading that I have had, so that I can have conversations that actually expand my knowledge. That drives me crazy, because they just want to talk about moving averages, and I'm like, who cares? Doesn't matter. None of that shit works. Those inefficiencies have all been almost completely removed from U.S. markets, and it's only there's only been opportunities of that nature because of the current interest rate policy, which is coming to an end, frankly. So, like, they're all wasting their time, right? But then, as much as I feel like I know, I go and I look at somebody that trades at an institution, for instance, and trades bonds. They know so much more about this stuff. You know what I mean? Like, and even if those people, like the let's say the top interest rate traders at Goldman, market makers at Goldman Sachs, the amount that they know compared to the total available knowledge about markets for treasuries is still only this like little chunk. Like, and how do we know that? How do we know that? Because there's a market, right? If you could come in and you could know 100% of everything there is to know about a particular market, there wouldn't have any need for an exchange. Everybody could just come to you and you could always make an efficient price 100% of the time, right? The fact that there is a market lets us know that as much as we know, it will always be a teeny tiny part of the available information out there. And some of that information might be this company is doing X, and these guys are, those all factor in too, right? And there's going to be this baseline of knowledge that like anybody that's competitive is going to need to know. And the real issue here is that kind of baseline knowledge, a lot of retail traders don't have that for their market. Like we probably don't know as much about treasuries as we probably should to be trading them effectively, because we just don't have access to that kind of information. I mean, like, I can tell you about how to price them and how they price them and find them as pricings. But I can't tell you like what the individual issue, each individual issue that is available to deliver for the 10-year Treasury future, what each one is priced at right now, because they don't have a Bloomberg terminal, right? So we kind of like ignore that stuff, even though we really should know it. Anyways, So anybody here in this channel should never be afraid to say something, and then we go into it and find out that we're wrong. And I myself, I'm never afraid to say like what my understanding is and then go in and look at it more. You ever run into these situations where it's like, okay, somebody makes a statement and then you come in and you say, oh, well, that's wrong because of X thing. Here's everything that you need to know to look into that subject. And then they don't want to look into that subject. It's like, I'm afraid to look because that might prove me wrong, and I would rather just double down on my ignorant understanding of what it was before. You know what I mean? That's where I find the saying, time in the market beats timing the market as a way to look at experience versus Jesus indicators like moving averages. Yeah. Well, you know, the funny thing about it, Etherator, is that from the research that I've seen, it's not like, sorry, their tweet, they're talking about this order on TikTok that they might do. I think that Joe Biden is going to make an order basically saying that these companies can't collect certain kinds of information from you, which would be good. So, some of these, like a moving average, like a simple moving average, from the studies that I've seen, kind of suggests that there was a time when that stuff worked. There was a time when that stuff worked. And in fact, the one that I was reading the other day, oh, I think I have it. Where is it? Let's see. No, I put it in scholarly articles, didn't I? Yes. Is this it? Here we go. Okay. Intraday market predictability, a machine learning approach. Conducting, to our knowledge, the largest study ever of 5-minute equity market returns using state-of-the-art machine learning models trained on the cross-section of lagged market index constituent returns, we show that the regularized linear models and nonlinear tree-based models, so these are the two machine learning models that they're using, yield significant market return predictability. Ensemble models perform the best across time, and their predictability translates to the economically significant Sharpe ratios of 0.98 after transaction costs. So that was like, wait, a Sharpe ratio of 0.98 is considered really good by these guys in this study? Because I've definitely, I've thrown away a lot of indicators when I'm like, oh, well, it's not over 1. And really, in my experience, has been that like you need significantly above 1 for it to really be, for you to really be able to trade it the way that a retail trader wants to be able to. Anyways, I digress. These results provide strong evidence that intraday market returns are predictable during short time horizons beyond what can be explained by transaction costs. Furthermore, we show that constituent returns hold significant predictive information that is not contained in market returns or in price trend and liquidity characteristics. Okay, let me read that again. We show that constituent returns, so I don't know what they mean by that particular part, but basically the information that they are looking at holds significant predictive information that is not contained in market returns or in price trend and liquidity characteristics. Okay, so they're saying when you look at the price and the liquidity and what you make, there is some information there in the constituent returns that you don't get. I think that the constituent returns means that they're looking at the individual stocks in the index. Like they're saying, if I look at the returns of every stock in the S&P 500 and I run a machine learning algorithm on that there's information in there that isn't being reflected in the future price. in the index price is what I believe they're saying. Consistent with the hypothesis that predictability is driven by slow-moving trader capital, predictability decreased post-decimalization. That was the part that I was reading this here for you guys. Consistent with the hypothesis that predictability is driven by slow-moving trader capital, predictability decreased post-decimalization. Post-decimalization means there used to be that you could trade stocks in like eighths of a cent and things like that. And then Congress came along and they said, well, that's too confusing for people. So all stocks need to be priced to the nearest cent. And they're saying that the returns, that the strategy worked better before they did that. Their strategy was pretty good, was really good, and then they did the decimalization and it wasn't as good. The market basically became more efficient, right? Because there was smaller increments. Returns are more predictable during the middle of the day on days with high volatility or illiquidity and in financial crisis periods. So what can you get from this? I believe when they say that there's the constituents, what they're saying is that if you are going to trade the S&P 500 futures, that you should look at a couple of different tickers like Google and so forth, and that those can potentially tell you things about where the futures are going to go, is what it's saying, I believe. But I haven't read the study to go into how they determine that, how the algorithm works and stuff, but should all be in there about how they did it. Decision trees models, is really interesting to me. Neural networks. So they come in and they show it's pretty good on trading costs. And yeah, there you go. Cumulative returns by model. And then they compare all of them against each other and then to the SPY. So the results that they get look pretty good. Although some of them do have, so like this ANN, that's a pretty nasty drawdown, right? And they're also only showing back to 2004, 2003. I guess that's not bad. I guess that's not terrible. As long as you get to 2008 period and you can see what happened to you there. But here you see they're making money when they had the 2008 crisis, for instance. So that's good. Anyways, so what is the point of all of that? A lot of edges get arbitraged out of the way, and because most retail traders are trading off of things that were discovered or shared with the world 30 years ago, they're extremely unlikely to continue working today. The only moving average I've seen reliably work is the 200 moving average EMA in stocks. So here's the problem with that one either. So like Bitcoin is like a really great example. Is like everybody was saying, well, we need to stay above this certain 100-day moving average. And then I think it was a 100-day moving average. And then, okay, well, since we're below the 100-day moving average, that means that we're in a bear market and I need to get out. And they were crossing it at like 40,000 or something like that. And I'm like, okay, so like, what were you thinking 20,000 ago when the market had just been pumped up again by another stupid tweet or whatever the deal was at the time? Oh, and the Coinbase IPO. And you had to know that people were going to be taking profits around the Coinbase IPO. Like, yeah. If you were relying on the technical indicator, then you were crazy late. Whereas people that were trading off of a fundamental catalyst, like the whole thing is that in order for us to get that low below the 100-day moving average after a huge run up like that, there had to be a really big change in the market. So there was people that sold it all the way up into that point. Why weren't you one of those people? You're always late, right? Well, wasn't the big problem for banks with trading arms was that they find that one spot, one sharp, and lever it all to hell to expand the return? I'm not. So there's certainly some things with like the long short equity strategies where they use leverage to expand the return. But I was always told that a really good hedge fund returns a Sharpe of 2 or more. And that there are some short-term, there are some high-frequency trading algorithms out there that are even higher. But then this study comes in and they say 0.98 is really good. And I'm like, So am I too hard on some of my algorithms? But then I look at the equity curve, and my equity curves don't look like that usually. There's usually a bigger drawdown than that concerns me. But as more hedge funds get on the same edge, yeah, exactly. Exactly. If other hedge funds discover the market inefficiency that you discovered, like I'm going to bet you that if we track the performance of all of those algorithms that we just looked at, that it declines, because probably some hedge funds and quants out there read that study and said, "Oh, I'm going to trade that," and they started trading it, and so now it's that inefficiency is maybe being arbitraged out of the market. If it was something simple, if there was a study that came out and they said, here's a certain type of moving average, and trading the crossover of that moving average, produces the same returns, then every retail trader would be like, oh, I can trade that easy. And they would start doing it, and the edge would disappear almost immediately, and probably even become a negative edge, something that you could like actively trade against. It's definitely a thing. But back to the original point, there's a lot of information about how they price treasuries, conversion factors, and basis trading, and all of these things that they use to convert from one thing into the other that most retail traders don't know about, don't ever think about. And now that we have like the futures and we'll have the interest rates, we should be able to go and snap it into a spreadsheet, right? You can go in and put it into a spreadsheet and do all the calculations and see if the interest rate future and the Treasury future are in line with each other as they should be, and maybe base trades on it. Probably that's going to be too simple. But there may still be some more complicated inefficiencies that we can pull out. Like maybe we'll have them. I think that we could structure our DOM like, here's the 10-year, and then underneath of it will be the 10-year micro futures. You know what I mean? And then we can look at it and we can say, okay, well, I want to buy it, but I'm not going to get a very good entry over here because it's 4,000, but I can get a good entry on the offer in the interest rate future, so I can go and take it over there. There's just like it opens up so many different things for us. It's going to be crazy. So I'm going to need to make a video about that. Just going to take some work today. A little financial juice alarm just went off in my head. It was very loud. Okay, let's check up on Twitter here. Oh, TikTok and WeChat aren't going anywhere. The White House has dropped the Trump-era executive orders that attempted to ban the apps. The Biden administration will instead conduct a review and aimed at identifying security risks with software apps tied to China. Yeah, okay. I've watched the guys at Tasty Trade do no BS trades, but never understood enough about bonds to be able to replicate it with confidence. You should link me that video. I've never seen them try to do the no BS trades with like the liquidity up and everything like that. Here again, you got to understand that the way the no BS Sky trades is there's definitely like edge in it, but my observation has been that on its own you can't get an edge from it. It offers an edge when you have a bias going in based off of fundamentals and everything about which direction it's going to go in order to get yourself a really good trade location. So the trade that I made this morning is a really great example. I came in, I knew that it was possible for me to get filled at 20.5, but that might be asking for too much. And so I put one out there, and then I also put a stop order to go in as she goes if they were to take 21 up. And then, of course, it just went. But then, because of my reading of the order flow, I was also able to see where there was a little bit of a hitch at 25.5 and to get out up there. And of course, this further move up after the E-mini opened was something that we predicted could happen, but we didn't really know enough about to be willing to take the risk. But, so I wouldn't have been able to make all of those decisions without what I knew about the order book from no BS trades and everything. But if I had just been sitting there looking at the DOM, I might have said, well, maybe I should sell into this. Like, there was nothing telling me I should buy or sell. At the time, it was a pretty quiet market at that moment. Or you could have waited, and then you would have gotten in like 4 ticks higher. You know what I mean? So that was kind of always the problem with the no BS thing, was that it's a little bit difficult. The order flow doesn't necessarily tell you where it's going to go up or down until it's too late. So those kinds of strategies, you'll think, oh, they go up at 29, like, oh, we're going to keep going, and then you buy it and it dumps on you. When pressed on if President Biden wouldn't go it alone if he's not able to get Republicans to agree to a plan, Buttigieg said the administration would prefer to do it together, but we have to get it done. Yeah, how would they do that? Okay, now the dollar has recovered, by the way. Ooh. Yeah, and right about at the same time that the treasuries came back, so. And the 6J took it particularly hard. I don't know about that. That one's super interesting. Gold moved up and came back and is kind of like, doesn't matter. Well, let me tell you what, today's auction is going to be super interesting, huh? Carl Quintilla says narrowest trading range for the S&P so far this year. By the way, how did Ace turn out? Because he was looking to sell, and he did get a little bit of a sell, right? I'm wondering if he was able to just pull the $10 out of it and then, or $100 or whatever, and then just be okay with that. That's what he normally would do. That's why I'm wondering. Because normally it's be like, oh yeah, I just only take this little bit. And then I'm like, how do you know that it's not going to just continue or not? And he can't explain it. Oh yeah, it's a 10-point range still. You could still make money on the E-mini. 25 to 35, 10-point range. Is it a road trip weekend, asks Patrick Rooney. Actually, yes, it is. Actually, yes. Do you think Futures IO has anything about the interest rate trading now? Probably not. Oh, wait. 4 new micros coming. Somebody did post about it. Oh man, so now I'm thinking about it and it's like, it's really, really going to be tight, huh? Like, I'll be able to take those trades with like 10 contracts. They're going to be like true micros. They're going to be like the margin required for those are going to be like nothing. The margin required for those are going to be like $30. Well, no, it'd probably be, let me guess. Like if we just said that it was like the Treasury, like the 10-year divided by 15. Yeah. The margin will be like $30. I'm liking it. I'm going to ask EdgeClear. Excuse me. Need to drink some water here. Well, let's see here. In a 3-part deal, Saudi Aramco will sell $6 billion in bonds. That's a lot.
Block buy.
That might be part of why we had this down movement. That is more than enough to affect the market. Ocasio-Cortez is telling migrants do not come to the U.S. is disappointing to see. Okay. Well, we got about 5 minutes left here. My issue is still thinking about all this stuff is like NinjaTrader or EdgeClear. Small exchange was a bonus for. I wrote this down in here, didn't I? With all of these moves that they're making, because one of the things was that the small exchange had micro interest rate futures like that, right? So I'm kind of starting to wonder how much of that is in response. You know what I mean? Here is a blog post they have about, I actually remember, I think I've seen that before. And I'll look that up again. So if we trade with NinjaTrader, we get to auto trade through NinjaTrader 8 and we get to use our full NT license. But if we trade with EdgeClear, we get group commissions. Were you able to get a group? We will set that up for sure. So what matters to me more? Your content has been the put to practice period. Yeah, I don't know. I'm glad that you find my content useful. Oh yeah, we did get that. Anyways, I don't know. It is a tough one for me. I think that the micro commissions would put more money in my pocket than the automated trading would. Because my automated trading has always been kind of like not as good as my regular trading. And I only have one algorithm that I'm really even thinking about putting out. And it's still in testing, you know. Let's see here. What did it do today? It took one trade today and it made money. So I don't know, but that's like $20 a day on that one versus, you know, what could we potentially make with the, I mean, we're probably saving like 50 cents a trade, and let's say that we take 2 or 3 a day and saving like $1 a day from that. Like the automated trading, probably, well, I don't know. I shouldn't even worry about it. I'm going to email them and see what they say first. Because maybe I just build a robot on Rhythmic API and I get access into all of that and we build a platform, and that would definitely be like worth more in the long run. Anyways. Do you have a title for today? Oh man. Yeah, Treasury's bid. I catch. How can we say that I took a really good long trade ahead of 10-year auction? Maybe we should put some 10-year auctions would maybe be a keyword that we catch. Easy Treasury long ahead of 10-year auction. That's what we put in. Could make it Saudi or something. I don't think anybody's searching for that. Okie dokie. Well, I will catch up with you guys later. Tomorrow, CPI, be here early. Huh? Don't want to miss that one. That's a huge deal. In the meantime, stay profitable, friends.